I don't think this morning I know what to do with this data when I push it through the bond market, Rick. The market initially sending yields higher by 6 basis points on a 2-year to 440. Others might be looking to fade that. Rick, how are you thinking about that? Have we reintroduced a higher risk now that they do go this month?
Yeah, I still think I think they're going to pause. If you gave me, but it's not that clear, and we've got CPI report to see. So, and which, by the way, we think is going to be a firm number. So, listen, I think you can pause. You've moved rates 500 basis points. You will start seeing credit contraction. And people say when you look into the numbers, we see it through our platform. All of a sudden, the financing dynamics around where the banks used to lend, we're now being asked in a bunch of different places. You're going to see credit contraction. And the thing I throw out there, we talk about the components of this job report. You lift interest rates and it hits the cyclical parts. What's clearly slowed is the cyclical parts of the economy. But Mike McKee said construction is different because of the infrastructure build that's going on. But gosh, are you going to really impact healthcare and education hires? Not really. And the question is, can you pause? Can you watch some of this data play out? The data is, the economy is normalizing, and you see it. Is it slower in inflation terms? It is. But boy, we're going to get more data, and I think it's going to tell you economy is normalizing to a more moderate pace, and you can take some time with that.
And in the meantime, by the NASDAQ, Rick, this rip-roaring rally we've seen in the NASDAQ 100, I think this is week 6 consecutive weeks of gains, and this morning NASDAQ futures up again. Big time and doing nicely going into the opening bell. Rick, at the start of the year, it was all about there is an alternative. There is an alternative. You can go to T-bills, money market funds, pick up 4-5%, do what you will. And now it just feels like the fear of missing out is kicking back in, Rick, into the equity market. Do you feel some of that?
100%. We've led, I'll tell you a couple of things that are interesting around the equity market. The volatility, you look at the VIX index, I think on the prior show we were talking about it. People are not long. It's the reason why volatility is priced so cheaply. People don't need to buy insurance because they're generally not long. You see that in high frequency data. And so, by the way, it's been you can build a portfolio today to carry a lot of income and then buy upside convexity in the equity market and can ride some of this move. I think the technicals in the equity market are really good. By the way, you're not getting a lot of issuance. Companies are buying back their stock, and people aren't long. You've got this incredible technical, and there's an interesting flight to quality trade going on here. You look at the big tech companies. We people talk a lot about AI, which is true and sincere, but there's also, you look at the cash flow generation. You look at, it's a bit of a flight to quality trade in a lot of these companies is going on. That's not terribly different than keeping some income in the fixed income market in the short end of the yield curve.